Well, hello and welcome to ED Now's Special Investor Education Initiative. This Diwali, we are calling it Master Class. Over the course of the next 15 minutes, you will hear from three wise men who have decades of experience in the markets, share with our viewers insights on how to approach the markets from these levels. Remember, we've had an incredible Samvat that's gone by, and most investors out there would be looking forward to an equally rewarding Samvat coming up. Our first guest on this masterclass session is S. Naren, CIO of ICICI Prudential, who's right here with me. Naren, before we start off, and talk about, what you have to share with our viewers in terms of market intelligence, tell our viewers about how optimistic you are about the coming Samvat, given what a phenomenal performance we've seen thus far.
See, the optimism is very much there. But, we manage other people's money. When we manage other people's money, we are taught to think about risk. And, just before the show, Nikunj asked me to give me a Diwali tip. So, the Diwali tip I want to give is asset allocation, because at the point that you have had a continuous string of market rallies over the last 4 years, what gets forgotten is risk. And that's why I believe that asset allocation is my Diwali pick, because I think that's what is forgotten after 4 good years.
Oh, absolutely. So, Naren, why don't you go ahead and start off with your first presentation, which is really about telling our viewers how there are 3 important variables that are holding ground for the market to move higher from here. Please.
Sure. I think the first I want to point out very clearly is the fact that you have a situation where the corporate profitability has actually come down significantly from 2007. And over the last few years, the debate is, why is earnings not going up and the market's going up? But earnings is a cycle, and people always worry whether earnings will come. And 2 years back around this time, people asked whether metals stocks will ever go up, whether metal earnings will ever go up. If you look at the last 2 years, metals has seen a very, very sharp increase in earnings, and therefore also a big sharp increase in prices. So like that, the base has been set for earnings to grow in the next 2 years. And our view is that there should be a good rebound in earnings, and over a 2-year period, we are very clearly of the phase that there should be a 30% growth in earnings. Actually, there is a nice indicator called corporate profit to GDP, and this indicator has corrected significantly in India over the last 10 years, and it's come to a new record low. And our view is clearly it goes back to at least somewhere at the average. And I'm not talking of above average. If it goes above average, the growth in earnings can be even more than 30%. So people ask me, why does it happen? It's simple. Capacity utilization in Indian industry has been low. And we think that capacity utilization in Indian industry is likely to go up over the next 2 years. And that actually leads to profits going up. And people have been saying, when will the capex cycle come? Capex cycle comes after the capacity utilization goes up. And that's why we think that in 2 years' time, earnings comes, and then capacity utilization goes up, and you have a capex cycle as well. That's a kind of cycle we expect at this point of time. So this is one key trend, because the entire equity market, wherever I go, people ask me, how can markets go up when earnings are not going up? But earnings is also a cycle. If I came and told you for the last 5 years, equity markets have gone nowhere, and after that, should I invest? I would have told you, invest aggressively. Like that, if you have had no earnings growth for the last 3-4 years, you're likely to see earnings growth.
And particularly, you're going to be expecting the earnings revival to come in banking, pharmaceutical and telecom sectors.
Yes, absolutely. Because if you look at it, telecom, you've seen the base. And you've seen a situation where bulk of the companies which were there in the sector have either consolidated or they have sold their businesses. So you're left with few players, and those few players are likely to do pretty well over the next 3 years. So earnings base in telecom is absolutely the bottom at this point of time. If you look at banking, clearly you have a situation where non-performing loans have actually gone up significantly in the economy, and that is likely to lead to a reduction over the next 3 years, because as they get provided, there will be an improvement in earnings there. In pharmaceuticals, a number of one-offs have happened. A number of plants were actually banned for export. They're all coming back slowly. So I think we have a very good base to actually look at.
The next theme is how you believe the export market is likely to pick up, and primarily IT and pharmaceuticals, Naren, you believe have bottomed out. Highlight the correlation with the rupee.
See, clearly, we have looked at dollar rupee over a long period of time, and we have seen that dollar rupee moves by about 3 to 4% against rupee every year over the last 30 years. It's a trend where there are periods of time when the rupee actually depreciates faster. Then there are periods of time when rupee doesn't depreciate. So we have had a phase where 2013, same time, the rupee was actually had more higher against dollar than today. So that means we've had 4 years of no depreciation. And clearly, we are going to see a situation where in the next 3 years, we'll go back to the old depreciation situation. And that we have seen the two principal exports of India are IT and pharma. And they will be the gainers in it. Actually, they have got hurt in the last 4 years because of a flat rupee. And we think they'll gain out of rupee, steady rupee depreciation from here over the next 2 to 3 years. That's the main call that we have in these sectors. And which is why export as a theme has done pretty badly. If you see the last month's number, it was one of the better numbers. And so that's why we believe export as a theme is one of the themes which has bottomed out and likely to do well.
Okay, and your third important highlight in this presentation, Naren, is looking at the infrastructure space, especially the power sector. That's where the cue lies for the pickup in economic activity.
See, actually, last year, same time, people used to ask us this question on telecom. How can the sector ever do well? But in the last 1 year, many of the top telecom companies have done extremely well. And today, power is in the same shape. If you look at what has happened in August, September, the plant load factors have started to go up. Out of a number of power plants, some are bankrupt and some are doing well. The ones which are doing well are going to see the big benefits over the next 3 years. Just like in telecom, a few successful companies are doing well and the remaining haven't been doing well. So I would say that, you are exactly like where you are in telecom. This is a more regulated industry, so the returns can't be as high as telecom when things improve. But I would say that over the next 3 years, do you think power demand will go up? Certainly. Can the weaker companies come back all of a sudden? The answer is no. Can the existing strong companies do well over the next 3 years by having 20% more production of power from their existing plants? Yes. So it's a clear case of operating leverage which is likely to pay up in a regulated sector. And if you see in the last 10 years, out of 10 power companies, 8 have gone bankrupt. There are only 2 which are doing well. Those 2 have a very good outlook for the next 3 years.
All right, Naren, thanks very much for running us through that presentation. So 3 clear factors that Naren believes could highlight why there's more headroom in this bull market. 1, capacity utilization picking up. 2nd, earnings being on the brink of a strong revival. And 3rd, the export market, which is essentially IT and pharma coming back on the back of a weaker currency. So those factors will make you keep the faith in the bull market that we are witnessing right now. 12 months of which we've already witnessed. Naren, let's start off with a quick Q&A from our audience that is live out here with us. Any questions that you have for S. Naren? He's the brightest mind from the mutual fund industry. Yeah, you have a question there? Okay. All right, I have a question, Naren. You've highlighted these 3 trends to support the bull market going forward. Give us your own sense of, within the financial sector, within the banking sector, where is it that you see an outperformance? Because PSUs have been a bit of a, they've been laggards, so to speak, in this up move. Will they catch up? Will there be a reshuffle within the market share that each one of the private banks hold? Will there be consolidation? What is the way forward for the banking sector? Because now you have insurance, you have other segments also adding in within the overall financial inclusion theme.
See, our bet there has been very simple. You bet on the financial supermarket entities. The banks which have insurance, general life, asset management company, and have a bank with both consumer and corporate. So if you look at the entire banking system, all the problems have happened due to the corporate book. And if you take an industry like mine, which is the mutual fund industry, it has grown for the last 5 years in a very good way. So I would say it's the best area to bet on are the supermarket banks, which have everything, which have general life. You know the listings which have happened of general and life. Yeah. And we're going to soon have asset management listings also. Yeah. So that's the kind of industry banks that we really like at this point of time. Many of them haven't done well for years in the stock market, but intrinsically the values are going up because the general insurance is going up, life is going up, asset management is going up, and their retail credit business is going up. So the corporate credit drag is likely to become smaller and smaller, and therefore there is a huge opportunity there.
Okay, we have a question from Vivek.
Good morning, sir. So you talked about how there can be value creation in NBFC space and all. So if these AMCs get listed, so definitely the corporate-facing banks, not to name them, but there could be value unlocking for them. Or is it like we are playing the theme as a whole? Or there could be like value creation for all these holding banks, those who are holding the shares of these AMCs.
What's your name, sir?
Ronak Bhartiya.
Ronak. Okay.
See, we are believers that slowly over a period of time, the holding company banks are likely to benefit. And for that, you have to have a situation where earnings improve in their core entities. And we are big believers, as I mentioned, that in the next 2 years, the core banking entities' earnings will improve because the provisioning will come down, not this quarter. It will come down over the next 2 years. So that's how we look at it. And there has to be intrinsic value accretion due to the increased value of both general life, asset management, etc. as well. That's how we look at it.
This is Vivek here. So another question, you spoke about the USD INR link. One thing which I want to ask you, you've said that IT and telecom have actually bottomed out right now. If you're talking about even the pharma space, the fact is pharma companies are actually facing a lot of pressure in the base business itself. In the light of that, would you still hold, or what kind of an argument would you say would actually revive pharma company earnings going forward?
See, as an industry, it's one of the industries where as you actually become more prosperous, healthcare as a percentage of GDP have gone up everywhere in the world. So as India becomes prosperous, healthcare as a percentage of GDP will go up. GDP itself goes up, and we think, over the next 3 years, actually some of the problems of, consolidation and lower margins in the export business will actually wear off. I'm not saying prices will go back to where they are a few years back, but things will certainly improve from here. And some of the companies have had FDA-related issues. We also believe those issues will also become smaller over the next few years, or at least the specific entities which have been hurt will be less hurt over the next 2 years. That's how we look at it.
Okay. Any more questions? On the manufacturing side, since you're saying that capacity utilizations will go up, Naren, where do you see the interest coming in? Because infrastructure is as wide as it can get in terms of the opportunities it throws up. So where is it that you would be hunting for value within the infra pocket?
See, actually, across, I would say, if you look at it, there's going to be a dedicated freight corridor getting created in the next 2 to 3 years. That's going to change things. Clearly, the road sector is going to see a big benefit because a lot of road construction is happening. So power is clearly an area. If you're going to have power, you're going to have transmission also happening in power. So I think in India, frankly, with the kind of capacity utilization which exists, why should private sector corporate capex come in the next 1 year? I think all the money is going to actually go only into government-driven infrastructure projects over the next 2 years. And that's why it's going to be very wide. The advantage is if you go back to 2007, there were 10 players in any industry. Today, there are 3. Is the market outlook for the 10 and 3 same? Yes. So these 3 people are going to have a disproportionate benefit compared to the 10 in 2007. And in 2007, the market valued all the 10. Yeah. Whereas now they are not willing to value the 3 whose business prospects are much better.
But just from your last slide, I got a sense that maybe the power space holds promise.
Yeah, clearly power space holds promise. You have to remember that it's a regulated industry. So the upsides that you can get in a regulated industry can never be as large as what you get in an unregulated industry because market pricing doesn't happen. If you look at metals, some of the metal prices went up 50-60%. You're not going to see that in a regulated sector like power. So while the outlook is fantastic, the outlook is very good, you can't make the kind of returns you're going to make in metals, in power, but at the same time the returns could still be good.
Okay, but I'll take your big theme to be banking from this Samvat to the next. Thanks, Naren. Thanks very much for sharing those insights with our viewers, live audience here as well.